Hey, good afternoon, everyone. This is Mark from Right Line Trading. And really, what we're going to do today is really do a weekly recap of all the trades we took. We're going to critique my trades. I had a couple of real bad ones, a lot of good ones, and we're going to take them all off the NinjaTrader Control Center. Uh, First, I want to start with the disclaimer that all signals and trading opportunities provided both orally, written, or electronically that are disclosed to visitors or subscribers are for educational demonstration purposes only. Right Line Trading takes no responsibility for any participation by visitors or subscribers within the futures or Forex markets, nor for any profits or losses may be incurred. Participation and trading in the Forex futures and stock markets does involve substantial risks, and it should be understood that a person can lose a substantial amount of money. Therefore, the participation in these markets is not appropriate for everyone. You have to do your own due diligence, consult a financial advisor prior to making any trading decisions. Right Line Trading is not a registered financial advisor and not a licensed commodity trading advisor. So what we're going to do now is we're going to take, now I didn't trade today, unfortunately. I had an event at my son's school that had to do, he's graduating from high school. And so I could not trade. So all the numbers that you're going to see here, gross, net, all the trades are for only 4 trading sessions. Now, first, let me go over the summary. Now, in 4 trading sessions, we made $1,460. We had a win percentage of 82.61%. We only had 23 trades in 4 sessions. I already calculated the commissions at $4.50 a round turn. That's about $225 in commissions. Very small number of commissions. And we had 19 winners and 1 loser. And actually, it's 20 winners, 19 winners and 4 losers. I really had 20 winners and 3 losers, and I'll show you how I mismanaged one trade that then went on to become a winner. Because after you get into a trade, how you manage it is also extremely important. But with all of that said, we made 1,460, and if we go back, we're up $4,550 gross. Trading percentage 82.76%, 72 winners and 15 losers. Very difficult in this market to trade above an 80% win percentage. And we're doing it. And if you take a couple of trades that I bobbled after the entry, we're really close to 80, 85%. But 4,550 gross. And not including today. And I missed a couple other sessions too, unfortunately, just because it's the end of the year and my son's got a lot of stuff going on in school. We're doing an amazing amount of money per session. But let's take a look at, let's focus on Thursday session. It was the last trading session that I had. Actually, for the week, I'm sorry. The 1,460. We're going to take the trades one by one right off the Ninja. Now, you're never going to see anybody do this because nobody's going to trade with this kind of clarity and transparency. And really, there's 2 ways of trying to essentially sell software. One is by performance, and one is called by social validity. I mean, if I can convince you that there's a ton of other traders making money, you might buy the software. And that's the way most traders or most software companies work. They're going to try to sell you software because their website is just completely filled with other traders who went from rags to riches. And some of the really big companies just tell almost little biographies of traders, but they're not going to show you this. And so let's take a look at our first trade, why we took it, and how it did. Now, we're going to do the NQ trades first, and there were only three crude trades for the week. So we'll come back and we'll get the crude trades afterwards. And all the crude trades for the week were winners. Now, the first trade on the NQ was executed at 9:35:21 on Monday. Now, here's Monday. It was executed right here. Here's 9:35:21. Now, it went 3 points or 12 ticks. Now, on this two contract strategy, we're all out with two contracts at 2.5 points, and we just nail $100. It's a very, very modest profit target. The second trade came right after it. Now, if you look below, let's see why I took the trade. If you'll notice, the candle is highlighted in magenta, and that's telling us that the multi-time frame assessment of order flow is to the downside. Now, the kind of assessment we do tells us that this puts significant buying pressure, I'm sorry, in this case, significant selling pressure on the market. Now, these two dots above the candle body are also telling us that even though we're trading the NASDAQ, we want to know the direction of the Russell and the E-mini. And on two different time frames, one's a fast and one's a slow. The X's are the fast, the dots are the slow, but they're both doing a multi-time frame assessment. And they're telling us that we're trading in the same direction as the Russell and the E-mini. Now, once you got that under your belt, you know you've got a lot of oomph on this trade. Now, background color is telling us that we have a multi-time frame alignment to the downside on the NQ. Now, it matures from bisque to pink, and pink is the strongest down color. Bisque is the second strongest down color. It's a riskier color, but we still know that we're not trading in this clear zone, which oftentimes defines really bad chop. So if you look below, these are dual quants. We call them quantitative lines because they quantitatively weight the correlative markets that we're looking at. And the three markets we're looking at again on the NASDAQ, in this case down here, is the Russell, the E-mini, and the Dow. And there's a fast line, the upper, and there's a slower line, the lower. I never take a trade without that slower quant line, red short and green long. They are key metrics in terms of telling us the direction of institutional money. I mean, I want to trade in the same direction as all of these correlative markets. And when institutional traders are selling the NQ, and they're selling the Russell, and they're selling the E-mini, and they're selling the Dow, you get these dual reds. In addition, I want to sell when momentum is aligned to the downside. Here's our Laguerre multi-time frame assessment. Modified Laguerre, the MTF is multi-time frame. And here's the Laguerre of our trading chart. And remember what momentum is. Momentum is an assessment of acceleration of price to the downside. If price simply moves to the downside at a constant speed, momentum remains constant. But if it accelerates to the downside, momentum will increase. And what we look for are areas in the market where there's such strong selling pressure that the chart gear, remember it's a bounded indicator, it's locking momentum right up against the zero line. I mean, momentum can't budge. Now, this assessment is being made off our trading chart. The multi-time frame assessment is being made off of our 2 higher time frames. And when that's locked short, you know that price is accelerating to the downside on our chart time frame and our 2 higher time frames. And that kind of momentum can only come when institutional traders are selling the market. Only institutional money can create that lockdown. Now, you'll notice that order flow turned first on the trade. We got a down candle with up order flow. And then we love these traders. And you're going to see how we leverage them. I'm not only going to show you my entries. This is going to be a really in-depth discussion of our trading methodology. You're going to see why it's so sound and why you can trade with 85% win rate if you just stay conservative and adhere to the rules. Now, we always want to catch traders in the counter trend direction when we take a re-entry. And the reason is simple. We know that institutional traders are pressing price to the downside. But we also want to catch these traders long to ensure that right at the get-go, this is going to push to the downside. And what happens right here is all the traders caught in this up candle are going to get stopped out as the trade just moves a little bit of the way to the downside. And it's going to shove this trade in our direction. You see this candle? That's why I took this down close. This is a little bit of a riskier background bias. Even though it's a multi-time frame alignment to the downside, I had these nice benevolent traders who were just itching to give me their money. And I was more than happy to accommodate them by taking it off their hands right here. Now, how do these traders get caught in the counter trend direction? They always do, and they always will. They're always going to be there, and we will never be among them. The reason they do is because they trade antiquated trading methodologies. They trade divergence signals, which in this market will not work. You have to trade in the direction of institutional money. Divergence is useless in my humble opinion. Sometimes it works, sometimes it doesn't, and that's the kind of signal you want to avoid like the plague. Also Elliott wave, also Gann theory. All these intrinsic harmonic movements that were probably quite accurate in the market before institutional money began to really warp the way the market moves are no longer operational. The same thing with Japanese candlesticks. I mean, Japanese candlesticks were created 400 years ago by the Japanese rice traders. And if you've listened to me talk before, you know that the major supposition they made was that the power of every buyer equals the power of each buyer was essentially equivalent to the power of each seller. And back then, that was true. In the 1950s and 60s, when the market predominantly consisted of commercial traders, the power of each buyer and the power of each seller were approximately the same. So the Japanese candlestick patterns were very powerful. An engulfing candle was a great signal. Dark cloud cover, piercing candle, doji, shooting star. They were good. But today, when a bank computer flips a switch and starts driving enormous money into the market in either the upside or the downside, the only thing that you can do is be right behind them as fast as you can. And let me tell you, it doesn't matter what the Japanese candlestick pattern was right before, or whether you're on the second wave of a 5-wave Elliott pattern, or in an Aganis assembly looking for a long or a short, or even sitting at fib support or resistance, they're going to blow it away. These things no longer have any predictive value. And I'm telling you, if you continue to trade them, they're going to continue to bleed your portfolio. You have to trade with institutional money. And let me tell you that that golden rule is only going to become more and more powerful as we move forward in time. The market is going to become even more dominated by institutional money. Right now, maybe on the NASDAQ, maybe on crude, it comprises 60 to 70% of all volume traded. I don't know what percent volume it consists of on the NQ. I do know when this kind of alignment occurs, it can only be created by institutional money. You're not going to get the NASDAQ, Dow, Russell, and E-mini down on a multi-time frame basis and knock momentum off its perch and lock it down like this unless selling pressure is very intense. And commercial traders simply cannot do this. And that's what we're looking for. Where platform looks to trade in the direction of institutional money, our entries are always going to capitalize off the mistakes of the traders who try to call a bottom or a top and get caught in the counter trend direction. Now, another thing that I want to say before I even go into the second, third, and fourth trade is that it is mathematically impossible to call a top or a bottom. The tops and bottoms are created by institutional traders. And there's no mathematical formula that's going to tell you when that bottom is going to occur. 30 years ago, the stochastic and stochastic divergence was probably a pretty decent signal. It's just not good anymore. You and I both know that the NASDAQ can be oversold for the entire day. And everybody who tries to counter trend trade it or call a bottom to the long side, you're going to get small moves to the upside maybe. But essentially, there is no bottom. The market is making small retracements back to the mean price of the 50, is just going to roll back to the downside, roll back to the downside. There is no bottom on the market. So forget calling tops and bottoms. If a piece of software tells you, excuse me, you can call a top or a bottom, it's a good reason to completely eject it from your line of sight. It can't do it. So the second trade was right here. We got taken out. We didn't get taken out. We made our 100. That's all we're looking for on the trade. Well, it's kind of a scalp. We have a second trade that looks for a lot larger amount of money on 3 contracts. On 2 contracts, we look for 10 and out. On 3 contracts, we look for 2 off at 15 and 1 off at 25. And I need to trade more of those strategies next week. If I did, we'd be up $2,000. We hit that. I traded it right here. We made 275. See, that was one of the rare 3 contract trades I took. This 3 contract trade made 180. And I took one loser on 3 contracts. But those were the only 3 I took. Everything else was 2. Risk was small, profit was modest. This trade, again, same setup. Dual dots. I've got the Russell and I've got the E-mini in my direction on a multi-time frame basis. I've got here on fast and slow, we add the Dow to the other 2 markets. Momentum's locked to the downside. This trade went 30 points. You can see it right here. Now, it really was incumbent upon me to find us another entry. And I should have taken this entry right here. And I want to tell you about an entry that if you don't know about our system and you're in the room for the first time, it's going to be a little bit different. It's called a pivot breaker. Now, remember, we want to always capitalize on traders caught in the wrong direction in order to get into a move. Well, this pivot, and our pivot indicator, is very unique and very powerful. It creates pivots off the candle body low, not off the wick low. The wick low is useless. The candle body low is where you need a pivot to form, and the pivot is only broken not by a little bit of a candle body pushing through, not even by half, by a 2/3 candle body move through the pivot. You can see the pivot traced until this 2/3 candle body closed. And what that does is do the same thing as this does and this does. Everybody in this pivot is looking to turn the market up. They did it here. Took the market up. And there are buyers sitting there waiting to turn the market up again. Just like an up candle, you have traders caught in the wrong direction. As soon as you break the pivot, you can go right back in. I was a little bit concerned because this move had really matured, but I should have taken the pivot breaker, gone in a third, and made another 100. I could have made $300 off this move. Now, if I traded one contract and just let it run all the way, I would have made more. But it's very tough. The one thing that is very, with our software, is to make an assessment of risk on entry. What's very tough is to determine how far the trade is going to go. That's why we have predetermined targets to take the trade out. I'm not going to go through all the chop and all the areas where we cannot trade. What I do want to do, though, is show you one of our brand new indicators. Now, this is the indicator you're going to get if you purchase the system now. After Monday, will not be included unless you pay extra. And what it does is it defines a channel. Now, it's not 100% completed yet, but a channel is in keeping with our trading methodology. I mean, really, if you really think about what we're doing the same thing every single time we take an entry. What does a channel do but capture traders? We've got these up, we've got this down, we've got this up, we've got traders down. A channel traps long traders and short traders in a very narrow area, very narrow price range. And everybody in this channel, we would never be in this channel because our goal is to exploit everybody in it, is sweating bullets. All the long traders want the channel to break out to the upside, and all the short traders want the channel to break out to the short side. Now, this channel has formed in an area where we can't trade it. I mean, this is just an indicator and we have to vet it. But when it's done, it will call the trade on the channel breakout. Now, this channel never is broken. It's got a pivot below it, but there's no 2/3 candle close below. The channel is broken to the upside because the market has come down a long way. Now, we have no trade here. There's nothing for us to trade. All I'm showing you is that this 2/3 candle close above the channel right here is going to be the software generated entry on the break of the channel. And we're close to perfecting the channel indicator. It's one of the 3 indicators I talked about a couple of days ago. It's going to be an extremely powerful move because you're going to get a ton of traders caught in both directions. And that's what we want to do. So let's look at our third trade. And these aren't hypothetical trades. These are trades I took. Trade number 3 was at 9:46 and 20 seconds. Right here. Now, unfortunately, fractal analysis or multi-time frame analysis is not handled that well by the NinjaTrader platform. It pushes everything to the right. And it's a fact of life. Nothing on our software ever reprints. I mean, when you keep it open, if you get an arrow and it fails, you're going to see it fail. It's never going to move. But the background bias, quants are going to get pushed to the right, multi-time frame Laguerre to the right, so that I remember the trade, the blue background was about here. I didn't have it yet. But the reason I took the trade is I was trading off a dual support. And I love to trade off a dual support. I knew I wanted a long trade because I knew the market was going to start coming into blue background, which is a multi-time frame alignment to the upside. That it's weak, but it gives us a direction. I knew I had order flow to the upside. I knew again I had the Russell, NASDAQ, and Dow to the upside. I knew I had momentum on 3 time frames to the upside. Price was accelerating to the upside. I had dual dots, which told me that I just had the 2 markets, which is the Russell and the E-mini on 2 other time frames. This is a completely different analysis. These analyze the markets very differently than the dots, and you want them both. It's sort of a neural net double check to make sure that all these correlative markets are with you. And what did I have that I really loved was I had my counter trend traders caught in the wrong direction, which I really, really like. Again, we are never going to be a part of this pack. And again, I was trading off a dual support. The yellow line is the VWAP, the volume weighted average price. And I had the 15. Now that's a system generated entry that is still not ready yet. It's going to be the auto trader signal. It does have some throw weight, but I wasn't trading this signal. I was trading everything else. The dual dots, order flow, background bias was going to kick in shortly, a lot sooner than you see it here on the chart. I had all my correlative markets going for me. I was trading off a dual support. I had momentum streaking to the upside. Price was accelerating to the upside. And only the Laguerre on this down candle is not going to budge off the 100 line. Stochastic, relative strength, Williams percent K, which are geared to give you divergence signals, are going to come right off that line. Now, they may not come down and traverse the 80 line to give you an exit, but they're going to budge. Trust me. I don't want to put another indicator on here to show you, but they're very sensitive to price movement, and we don't want our Laguerre line to be that sensitive. You can see the Laguerre on the chart turned as soon as we got this down candle, right here. I mean, it didn't turn on this candle, but it turned here. So once momentum really waned, you see the multi-time frame alignment of the Laguerre? It stopped here. We go here, we go up. I want to be as accurate as I can. I mean, the chart's giving you all the information you need. You just have to be able to interpret it. And after a while, you will. Right here, you've lost the multi-time frame alignment of momentum. This, even though price is continuing to rise, it's not accelerating up anymore. It's now turned off and it's gone yellow. And it foreshadows the collapse in price. Now, we do not trade tops and bottoms because institutional money can come right back in and blow this right back up. This just turned out to be a great move to the downside, but I am never, ever going to take a counter trend trade, ever. So now we're 3 trades, 3 winners. Now remember, this is my ATM strategy, my decision to trade 2 contracts. And we have traders in the room that are up $1,000 and $2,000. It's really up to them, and they take a much, much riskier first and second target. They'll make more money. The 3rd trade on Monday was at 9.55. There's the channel. No trade out of it though. And there's the entry. Now, unfortunately, right here, we are kind of Scrooge'd by the fact that Ninja will change the color of the candle body and will push our multi-time frame assessment to the right. But on this candle, I had order flow. I had the multi-time frame Laguerre. I wouldn't trade without it. And I had the quants, I had the background, I had the dual dots. And what was very important to me was I had these great dual candles to the downside. So I got to run over even more traders when this trade continued to the upside. And it went 5 points. And this one made, our 4th trade, made $100. So we took 4 trades, 4 winners, $400. We traded 2, 4, 8 contracts and very, very small commissions. If you take $9 a round trip times 2, 4, 6, 8, 9 times 8, we paid $72 to make $400. Now, obviously, some of these trades were gigantic winners, especially this one. I mean, this was an entry that went 30 points. I should have gone back in. And I'm critiquing myself and showing you. This is what we do in the afternoon when the trading room closes. We have the session, and this is how you learn. You go back and you look at the trades that you could have potentially taken, or the bad trades you took that you should have sidestepped. And you get a better and better feel for what you're trading. Now, the next day was the only day of the week that I really had some trouble. And I really traded this day bad. And I'm going to show it to you because I think it's instructive what to see it. Now let's go to, I stopped trading. Our profit target is 300 to 400. We're up 400, and I'm not going to trade past our profit target. To me, that's too risky. And if you sit in the market long enough, eventually, we're trading probably the most volatile instrument that's out there, the NQ. We've got it licked. And you get 4 trades and 4 winners. We were done at 9:55. We had been trading for 25 minutes, and we walked. We had a nice, great educational webinar in the afternoon. Forget about the rest. So I'm going to go past all. Listen, you're going to, if I keep, I don't want to do a minute analysis of every potential winner and loser for the whole day. Let's just look at the trades I took, because I guarantee you there were more winners, and like here's a break of a pivot and a gigantic winner. I mean, well, I'm not going to critique the whole day, because then I have to look for losers. And let's just trade let's critique the trades I took, the ones that are right off of the NinjaTrader platform. So let's go to the next day. And the next day, I had a perfect lock day, and I blew it. The key was I came back and we made money. But I had to churn the portfolio, and it was really based off of really poor judgment. And human error you're never going to eliminate human error. I mean, everybody in the room tells me I beat myself up a lot, and I do. And I like to beat myself up because I'm not a masochist, but I believe it's the only way you're going to learn how to trade. And I'm very hard on myself when I take lousy trades. But here's how the morning went. The first trade we took was at 9:45.04. Right here, 9:45.05 was the break of, this is the open price, which acts as a strong area of resistance. There are buyers in this line because price opened here and went up. And it went 8 1/4 points. It was a stellar trade. Now, we didn't have the Laguerre on our trading chart locked down, but it was heading down nicely. And I made $100. So there's trade number 1. Trade number 2 was at 9:50. Now, right here, again, background bias had moved over. This was a riskier trade because the pivot was right here. And it worried me a little bit. But you have to just trust me, I had dual quants, dual Laguerres. I did not have background, but background was imminent. It was only 1 candle away. Now the trade went 5 1/4. And one of the reasons I like the trade is it was very tight to the 50. And the tighter you are to mean price when you trade, the more likely the trade is to be successful. In fact, the only parameter I believe you can use to create an overbought, oversold parameter is the space between the 50 and the 15. As the 15 begins to separate away from the 50 on a statistical basis, the trade is less and less likely to continue on. This was a real tight trade, and I did have dual quants and dual Laguerres. If I didn't, I would tell you. And this went 21 ticks. So I've got 2 winners. So all I have to do is wait for a really superlative, low risk third trade, and I'm 3 and out, and we're 7 in a row. And I would close today on 3 and out, which is really our rule. We hit our profit target, or we get 3 winners and out. So I took this trade. I missed. Did not take this trade. This is not a 10:03. If I would have taken this trade, we would have been out. I missed it. what I did was I took this trade. This was a horrible trade. And it's pretty much as you see it. Order flow was not in my direction. I did have dual quants at the time. There was green here, but I had magenta candle. I can't remember if I had the Laguerre. Trust me, it was a horrific trade. Now, it was a break of dual resistance, but this is not the kind of trade you want to take. Remember, cyan is not a great background color. I didn't have dual quants. I didn't have dual Laguerres. And the key was I didn't have order flow. I took it anyway, and I got just what I deserved, a fat loser. And really, after I took it, I just felt like crying. I was down 240 bucks. Now, I only took it with two, and then I made a very common mistake. You revenge trade. You take a lousy trade, you really get angry with yourself, so you're going to come back and you're going to punch the market in the face. So I bumped it to 3 contracts. I should have just stayed at 2. Right here, for the day, we're only down $40. No big deal. You can still come back with 2 or 3 winners and close the day nice. But I went to 3, got angry, took this pivot breaker. Now on this pivot breaker, I did have order flow, but look how close this was to the pivot. Of course, it didn't break the pivot. It bounced and gave me another loser. And this was really a bad trade. I mean, the entry to the pivot, there's no space whatsoever. And remember, the pivot is an area. It's not just a line. And you have to consider that you're going to start running into buying pressure right about here. So I took another really bad trade. I had dual quants, I had dual Laguerres, I had pink background, and I did have order flow. But you just don't trade into unbroken resistance. And it was a terrible trade. So I immediately rung up $465 in losses on 2 really, really crappy trades. Then I came back right here on the pivot break, which is where you should take the trade, and we went 6.5, and I made 180. I took it again with 3, and I probably should have just taken it with 2. I did have the long-term Laguerre here. You just have to take my word for it. But then on the next trade, I took another loser. I mean, this was really where I was feeling a lot of pain. And the trade was a stinker. It was this trade. And I don't think I have to tell you. You see, I put a pitchfork on it. You know Andrew's pitchfork? I was so angry, I just put a pitchfork through the trade. Now, I don't know if I had background bias. I don't believe I did. I don't think I had anything here. I just took one of the worst trades on the face of the planet. And it was because I was angry, and it was because I was gaming the market, and because I thought the market was going to go up, which was absurd. I was trading right into upside resistance here. And this is the only difficult time I had for the day, for the week. Now, I'm just going to go to this one day so we can see how it went. And this is on Tuesday, the 4th. Let me make sure that it's on the right Tuesday. This is the 21st, and here's the 21st. So here I am, down $325. I'm sorry, yeah, down $325 on 3 horrible trades. And obviously upset. But what I did was I just calmed down, drank a Pepsi, and the next trade was at 10:33. right here. Now 1033, I had the Laguerre, I had the chart Laguerre, I had dual quants. We broke the VWAP. There's room up here to resistance. I took it. This was risky because sometimes you should take your. There's nothing wrong with taking your profit at resistance. I let it run all the way for 7.25 and rang up a full winner at 275. I mean, I took the risk. I made a judgment call that we were going to break resistance, and you really don't have any idea. If you're trading it conservatively, you're going to take it out at resistance, settle for less money, because you can always get a bounce right back in your face, and you're going to be really sort of heartbroken if that happens, because you're going to give back a lot of money. But it bashed through, and now we're only down 50. Then I got really conservative. Now I got into let's protect the day mode. I got a $275 trade back. We're only down a fraction. At the very worst, it's going to be a scratch loss day, and that happens. So I only took 2 contracts. The trade was at 921 on 1040, at 1040. And look at that trade. Now that is for all the meat and potatoes. Green back, this is what you should just wait for. Green background, dual dots, order flow, dual quants. The long-term Laguerre is right there. The Laguerre on our trading chart isn't really strafing up to the upside hard, but it's just too much not to take. And this trade went 9.5 points. It actually went further than that. I didn't even bother to scale it anymore. We only got 2 out at 10 ticks to make 100. But it was just a gorgeous entry. I took the next one. Again, the Laguerre was sagging, but I had the long term, and I had dual quants. I had order flow. And remember, I want to break a pivot. I don't want to take a trade without exploiting somebody. And I couldn't take this trade. This order flow was pink here, but I got this pullback wick and was only 1 candle off the pivot. And we were up and in. This one was the pivot breaker. And I carried all these sellers with me. And this one went, I'm scaling it at 5, but we were in here. And I can give you the entry price. I know we were. The entry price was 76.25, which is well, I didn't take it there. You know that? I took it here on this pullback wick. I missed the entry here. And you know what? I didn't have the Laguerre here, and I didn't have the fast quant. I waited until here, got the pullback, and this wick is called a bear failure because the bears try to turn the market just like a reversal candle, and up we went from here. And we made 5 points. I did not take this trade simply because look at the size of this move. And look at the distance. And right now it's subjective between the 50 and the 15. Got great separation here. It's 11.5 point separation. It's overbought market, and I'm not buying it again. And then I took the last trade on crude oil, and we'll go to crude. It's the first crude trade I took, and I know I mismanaged it. The entry was at 1140. I don't have the right day. This is on the 21st. Right here. Look at the pivot breaker. Well, I didn't take it there. I took it at 1140, right here. No, I couldn't have taken it there. 1140. Is this the right day? 521. Time 1140. Here's 41. Here's 41. Here's 41. I took the trade right here. I felt we had space to the pivot. And on the trade, we had pink background, and this was pushed over. I know I would never take it without the quant and the long-term Laguerre. The chart Laguerre was just in the process of rolling over. And what I did was, I got scared on the trade, which is ridiculous, and closed the trade when it was only up a couple of ticks. And look where the trade went. It went all the way to here. Now, I could have re-entered on this pivot breaker, and I didn't. And I really mismanaged this trade horribly. This from here to here, that's 13 ticks. That would have given us about $200. So I closed with 40 only. I really mismanaged a nice an entry here and a re-entry here that I didn't take. But that's why we go over the charts. That's a pivot breaker and a great trade. And we close with up 190. Despite all my mistakes, and I had a lot of mistakes on Tuesday. So let's go back to Monday, and let's go back to Friday. There'll be no trades today because I wasn't here. And let's go to the 22nd. Here's our first trade. It's on the NASDAQ, and it's at 930.58. I remember this trade. This was a quickie. And trading the NASDAQ open is very dangerous because, there are buy-sell imbalances that need to be worked out. And you can really get crunched, mangled, spindled, and folded if you try to trade the open. But here was the down candle. And because I had the down candle, I don't have the trades in, because I have this candle, and sellers tried to turn the market here, I took this entry long. And this entry is exactly at 9:31. This entry time right here is 9:30.58. It's 2 seconds separating them. And this trade went forever. Went 20 points. Now, I only took it with 2 contracts when we made $100. I took a little risk. I made a little bit of money. I should have tried to get back into the trade, but it's a little tentative to do it so early in the NASDAQ day. The next trade was at 9:54. It took 24 minutes for the next trade to occur. I pass it. 9:54. I took the pivot breaker. Now I did have dual quants. I did have dual gears right here. I did have green background. And I know you may think that I'm just, telling you, making these colors up, but we had order flow. It's just been changed. And this trade went up nicely on a beautiful pivot break. And look at the dot color. It went 5.5 points. And we made another 100 right here. Now, I had an NQ trade that I muffed at 10:21. Now, something happened at 10:15, and it turned out to be something, I think, with the Fed. And I really blew the trade at 1021. What did I do here at 1021? It was 1021.37. It was right here on this entry. I closed the trade because I realized how close I was to the VWAP. I did not have background bias here. I took it without background bias. So I was very, very worried about the trade. I did have order flow. I did have dual quants. I did have dual gears. The trade was a winner. And I just closed the trade. And I closed it at -20, which is about the worst I could have potentially done on the trade when it was a winner. Then the next trade was another winner at 1034. Same day, the 22nd. What a beautiful trade. Was this break right here? Break of the VWAP. Look at all the red right below here. Now the rules are really very firm. Every time I stretch them or break them is when I take a loser. The next trade, same day, was at 1037. Oh, I had two at the same time. This is a great closer. I had a winner on the NASDAQ and crude at the same time. Doesn't happen often. But the NASDAQ trade was at 1037, right here. Now, I don't think I had order flow on this candle. Whoops. So I think I had it right here and took the trade down for a winner. And on crude, I had a really nice trade. When you see this trade, your eyes are going to pop out. Made 180 bucks. No, this is the next day. Here's the crude trade. It's still a really enormous trade. At 1037.13. Let me just get to the right day. This is the right day? No, 1022. $10.37. Crude can be really difficult to trade. And here's the trade. Let me bring the dome back up. It was at 1037 on 522. This is 523. At 1022. Where the heck is it? 1022. The date's 522. Hold on a minute, I'm sorry. Let me just grab 520. Oh, it's 1037. Right here. 1037. Right in here. Either here or here. And I got this entire move. Now, I don't think I had the long-term gear on this trade. I traded without it. But I did have order flow. And we got a nice move to the downside. Now, I may confuse you because on 90% of the trades I took, I had everything. And on a few of the trades, I didn't have 100% of the independent variables we need to take the lowest risk trade possible. And with a little bit of chart time, you're going to be able to quickly see when you don't need 100%. And so these two trades were both winners right here. Then 1023 was just a really quick morning. That was yesterday, my last day I traded. The first trade was at 933 on crude. On crude, yep. Full winner. We took 2 contracts off at 9 for $180 at 9.33. Right, look at this trade on the pivot breaker. I mean, this is your bread and butter trade. Just stay with these trades. I mean, and look how far the trade went. Now we took 2 contracts out, 9 ticks, and look where this trade went. Here's the breaker right here. The trade went 54 ticks. Just a gorgeous trade. And that made us $180. Then I took the next trade on the NQ. The trades on Thursday yesterday were just stellar. At 9.40. And then I'm going to talk briefly about 2 indicators that are coming next week. Right here, look at the pivot breaker at 9.40. It was 9:40.57. It's 3 seconds away from the way it's right here. And look at the move. I'm not even going to bother to scale it because we did 2 out very conservatively for 100. We're up 280. Then I took a trade at 10:02. Right here. Look at that trade. I mean, this is kind of a gimme trade. We've got these 2 great set of sellers calling a top. We're in long on dual dots, dual quants, dual order flow, dual gears, and man, this trade's going to go. And we made another 100. So for the week, in 4 trading sessions, we made 1460. And here's how the equity curve went for the whole day, for the whole week. Right here, we went down to 75 on awful trading of mine. And then we just never looked back, all the way right to 1460. And that was a winning trade that I muffed on the NQ. So I took 3 horrible trades that were very costly, and we still closed 1460 gross for the week. And for the month, now prior to this, I had surgery. We're up 45.50. I mean, you cannot beat that when 90% of these are 2 contract trades. Now, like I said, you can trade a different automatic trade management strategy. The 3 contracts are to get you 275. The 2 contracts are going to get you 100. And I would have made, the way the trades evolved, I would have hit almost every first target on the 3 contracts and a lot of full winners on the 3 contracts. I would have made much more money. I mean, I think closer to $3,000, and I'm not overstating it. I just stayed very, very conservative. I mean, look at these trades. I mean, we're looking for 25 ticks to take the trade out for $275 on 3. And this trade goes 17.5 points. So we would have unbalanced, in retrospect, done much better. Now, I'm not going to look at today because I don't want to do an analysis of trading in a market I did not trade, only because that's not really my goal. I wanted to critique my trades, show you what we need for a winner, how well I did. When I didn't adhere to the rules on Tuesday, I got hammered. And when I did on Monday, Wednesday, and Thursday, and then for the afternoon, after I got hammered on Tuesday, I still closed the day up almost 200, and we just sailed through the week. Now we have 3 indicators we're adding to the platform. One is the consolidation indicator that you see here, and it's in its 2nd trimester. It still has not gone into its third trimester and has not been delivered into this world yet. But Sergio is working on this hard. We'll have this next week. You know what it's going to do. It's going to call an entry on the break of the channel. And you know what we're doing on every entry. We're looking to leverage traders caught in the wrong direction. And we're almost always in the right direction because we've got all the correlative markets telling us the direction of on the NQ, the Dow, Russell, and E-mini. We've got momentum assessment. We've got order flow assessment. We've got the multi-time frame assessment of the NQ. We've got so much piled in our direction, or we're almost going to always call a channel break right. It just has to be a setup. We need a multi-time frame alignment. We still need our rules. But when we get this, it's going to be a new entry. We won't need a pivot. We won't need an up candle and a down move, or a down candle and an up move. We're just going to take the break of consolidation right here and the move down. And that's one stellar trade. And that's what we would have gotten. Now, if you had any concern about taking the trade on this 2/3 candle close, on 2/3 candle break below the lower channel, you got to take this short. And you're going to stop all these buyers out and push this trade in your direction. The other indicator is an easy one. It's already done. I just haven't projected it. It's when we have all reds or all greens. So right here on crude, it would tell us that we have dual red Laguerres and the quant. And this would tell us, well, I want to try to make the chart as easy to read as possible. What we're looking to do is take 90 to 95% of our trades when we've got both Laguerres red and both quants red, both Laguerres green and both quants green. So we're going to create, Sergio has a really unique way of projecting it. It won't make the chart busier. It'll actually make it more informative. And then a really, really stellar indicator, which he has determined, I was concerned that it could not be programmed. I'll just show it to you really briefly. It's our volume momentum indicator, the first of its kind. And I think it's going to give us incredible trades based on a whole new principle. One line, and I'm only going to do it briefly. Again, it's included in this platform on this offer. It will never be included again. The consolidation indicator, the all red, all green, and this indicator are going to be add-ons. Everyone who owns the platform is going to get them, and they already have been informed of that. So we're going to have one line that simply reads out the number of contracts crossed every 10 seconds. And I was concerned that we couldn't get it into units of 10 seconds, and we can. So we're going to look for volume to skyrocket. There's an institutional trade when volume skyrockets. And it's probably going to, I would say the institutions are going to kick in. I mean, I drew a rotten line here. Let me redraw the line, because this is not really the way the institutions and volume work. And I've looked at very early beta examples of this, and this is really what they do. You're going to have volume sort of chopping along, and you're going to get a little bit of an up and a little bit of a down and a little bit of an up every 10 seconds. And then all of a sudden, it's going to go like that, as institutions just drive volume to the upside. But here's what's going to happen. And this is going to be the case 85 to 90% of the time, is that price like around here, is just gonna, let me move to the pen, is gonna not do much. And it may do something. I mean, you get low volume moves, but when institutional volume skyrockets, price waits, and then it skyrockets. So what you get in this window right here is literally nothing more than a 10-second lag to get your buy-in. And it's going to be an audible alert. You're going to buy right here in this little window on skyrocketing volume. I think we're going to set the curve here at 60 degrees, which is very steep. And when this starts moving 60 degrees, now this line is volume per 10 seconds, which is just like the first one, but we're going to multiply it times delta price. And the price can be in ticks, pips, or cents. So let's say price here, we're not going to give a price that's zero, because that's going to make this line become zero. So the lowest delta price can be 1 cent, 1 pip, 1 tick. But when the delta price goes to 3, this is going to move up 3 times the slope. And when it goes to 4 pips, ticks, or cents, it's going to move up with 4 times the slope. So eventually, price is going to sit for 10 seconds and then go ballistic. And I'm telling you, I've seen it on our early versions. It just goes like that. And that's going to be our third indicator. It's going to give us a lot of institutional moves, a lot of news that comes out that moves the market. We'll miss some because our window is very narrow between the skyrocket in volume or per 10 seconds times the line volume per 10 seconds times delta price. But if we're sharp and we get that audible alert and we're quick with our mouse, and you've got a quick hand and a quick index finger, we're going to get a lot of these trades. We're not going to get them all, and the indicator isn't going to call them all. But all you need this thing to do is to call 3 or 4 of these a week, and these are the trades you're going to take with a big automatic trade management. I mean, we're going to look here for 30 or 40 ticks, pips, cents, whatever, a huge move to take us out of these trades. And that's coming. Those are the 3 indicators. So I'll just show you the offer we got. It's our Memorial Day offer. And it's our last offer at $13.99. So help me God. And I don't want to, start beating about all of these gurus and all of this stuff, trading these simple chart patterns. But I'm telling you, if you do it, you're going to get beaten up. No one has this kind of transparency that we do. Nobody shows you all the trades they took in the live trading room. And if they even have a live trading room, most of them don't. And if they do have a live trading, it's educational. And ours is educational, but they will not trade on the right edge. They will not create that equity curve. They'll just say, oh, there was a nice trade, and there's how it goes. I could give you a dozen rooms right off the top of my head that will do that for you. I'll never call a trade before it happens. And all our trades are projected on Chart Trader. You see the first target, second target going out. Very transparent trades. So here's our offer, and then I'll answer any question that you have. I mean, normally it's $29.99 now. It's going to go up in price. And we're going to give you the whole caboodle for $13.99. It includes a month in the live trading room. It includes 10 module educational training, includes 450 tutorial videos, and it comes with those 3 indicators: the consolidation entry, the volume momentum indicator, and we call it the triple alert. I don't know if ultimately that's what we're going to call it, but it's the all green, all red. Now, the educational training session is something I'm contemplating, but I'm not going to worry about that. And the first 5 orders, I'm going to give you the market analyzer. The market analyzer, I don't have one set up. It's right here. It's going to allow you to watch a whole bunch of markets. These are the micro contracts, and tell you when to open the chart and when you have a good trade imminent. It's a great tool if you're trading Forex, futures, stocks, and you want to trade multiple instruments. I don't do it in futures because I can make more money than I can deal with trading 2 charts. I won't need more. If I traded stocks or Forex, I would use this tool. And we can format it for you for whatever you want to trade. It's got multiple inputs. Here's 4, 8, 13, and 21. It looks at multiple time frames. It looks at all the stuff that we look at and throws the trade at you. I'm going to give that to the first 5 orders. After Sunday, each of these indicators that I told you, even with the full platform, is going to be an additional price. We're not going to be Mr. Nice Guy anymore. It's going to take us an enormous amount of time. It took us an enormous amount of time to program these. And if you want these as in addition to the full platform, you're going to have to pay extra. And I'm not kidding. I'm not jumping you to buy, and then you're going to see on Monday, you're going to get a $13.99 offer. You will never get a $13.99 offer again. So the whole thing expires on Sunday night, and you get basically almost everything that we sell. If you have the full platform, you're entitled to all of this anyway. And our promise that you always get free upgrades. And I've been upgrading people for the last 5 years. I mean, I have people that bought a night in 2013 that are still getting upgrades without any cost all the way to 2019. And they're in the trading room. So I keep my promise. And if we program something really nice, and we're just not going to charge you for it. And everyone's always charging you for version 2, version 3, version 4. We don't do that. We're very sort of righteous about it. If you trust us, we're not going to ask you for more money. The only thing you're going to pay more for is if you want to stay in the trading room. Our number 786-732-4656. And let me answer any questions you might have. Hang on 1 second. Okie dokie. Hi, guys. All right. Hey, Eddie, my pal. Eric. They'll all be available next week. Eric, all of them. I mean, Thomas left. It's too bad. I would have liked to answer his question. Today, Gary took 3 trades live, NQ, a 1 crude, 1 NQ, 1 ES. He made $337.50 done at 9:48 in the morning. Gary, my hat's off to you. And I mean, Gary's a relatively new guy here, and he is raking it in. And Gary's trading a live account, and he is making money. Let me tell you something, Gary. It took me like 5 years to get here, and your learning curve is just been astonishing. You have that Stephen. We don't have it on NTH yet because it's a useless signal. When we get the auto trader up, that huge plus sign will become operational, and you'll get it on NT8. Do not worry about it. We purposely didn't put it on NT8 because I never take the signal on NT7. It's just not good enough yet. I didn't talk about the continuation signal, this one, which is really a great signal. You see this line here? This looks at a multi-time frame range chart. So he's looking at 11 range, and the shorter is the 8 range. And when the range and the Unorenco align, You get this great entry signal. But what Stephen is talking about is this on NT8, we didn't bother with it because this is going to be the automated trader's entry signal. And right now, if it doesn't come with this, it's not valuable. You're going to get tons of losers if you trade it. So just ignore it. And I should probably just take it off because I don't use it. So don't worry about it right now, Stephen. When it's operational, you will get it. No, I know exactly what you're talking about. Hey, Casey. This was a SIM account, Casey, and let me tell you the reason why. I don't want to say too much, but the CFTC is really out there, and they are looking for rooms that are trying to talk about I can't be that open about it because it's a big problem and a big issue. And believe me, I know about it because we have a company attorney. Now, I've traded a live account for a long time and I may again. But right now, I want to make sure it's clear that this platform and what we do is for educational purposes only. I'm not going to put the company at risk. And that's the only reason I do it, Casey. And I'm being 100% upfront with you. I take the trades on a NinjaTrader platform. There's many ways to set it up. You can take a NinjaTrader platform and trade it so it takes no slippage and fills on touch. Or take unlimited slippage and not fill on touch. We deal with horrible slippage. I think this SIM platform takes more slippage than a live account. And we have it set not to fill on touch. We get 10 tick hits all the time that don't fill. So even though we're on SIM, we deal with all of the vicissitudes and difficulties and problems that you have to deal with trading a live account. And right now, when they're looking around for people, I'm going to trade this account on SIM. And that's the reason why. I believe with 100% certainty, I can make more money trading live. But right now, I can't do it, and that's the reason. It's for legal reasons, and I want it to be clear that this is for educational purposes only. If you trade live, I can't enforce that rule. But that's basically what we're doing. And I'm being 100% transparent with you. And if anyone tells you differently, I'm telling you they're not telling you the truth. And that's really that. And no, there are rooms out there that trade live. They do that at their own peril. I want to be around in 3 and 4 and 5 years, and maybe they won't be. And maybe it won't matter, but I'm not taking the risk right now. Okay? You know what, Casey? I kind of ran through it. And I think over the course of the last few years, this system has really dramatically changed. We used to trade range. We're on Unarenco. Our quants are recalibrated. We didn't use the Laguerre. We didn't have these dots. I mean, this is a really revolutionary system that really has evolved over the course of the last year or so. It is not the same system we traded. If I have, you can go back and find videos that I made in 2013 on YouTube, and you will see the system is very different. I mean, this is a much different engineered platform. Our methodology is the same. We were always looking to run over traders in the counter trend direction, but we've simply found better ways to do it. That's all. It is being recorded in here, yes. Yeah, Gary said he got scared on crude, got out with 4 ticks, and he watched it go 19 more. Gary joined the club. Crude scares me too. And I took that trade and I made 40 bucks this week. And it went also, I think it went 17 ticks. So believe me. And you know what, Gary? If you should stick with your automatic trade management, but if you take it out, and remember, our goal in the room is to avoid losers, not to get every winner. And obviously, we're never going to call a top on how far the trade's going to go. But if for some reason you got low volume, you're in the trade, it's not evolving nicely, close it. If it goes 19 ticks on you, so what? Never have fear of missing out. Never have fear of not getting that full winner. If something grabs you, it's got to be something objective, not subjective. And you're out of the trade and it goes on to evolve into a big winner, don't worry. You should never worry about it. And I bet you, Gary, you did the right thing. Thank you so much. Patrick, it's a 2/3 candle body. So I don't know, that's a really good question. I don't know how many ticks. I can tell you on the NASDAQ, if you look at the candle body, what we do is we have a 14 tick candle body. So it's gonna, at 7 and 7 is 14. It's going to take 8 ticks to break the pivot. 6 above and 8 below is the way it's going to work. I mean that's based on the Unorenco configuration. That a candle body in a trend is 14. We're not looking at a reversal candle. So 8 through and you're good to go. Okay, I'm sorry. Okay. Will it work with tick volume as well, i.e., I'm not sure, Pizzazz, what CFDs mean. If you can just retype that again for me, I'm not sure what those mean. Will it work with tick volume as well, i.e., CFDs? I'm just not familiar with the abbreviation. I'd love to answer it if you can just give me what that means. Sure, Michael. A downside move is going to look just like an upside move. You're going to have volume skyrocket. You're going to have price times volume in ticks skyrocket. 5 to 10 seconds later, only the move is going to go to the downside. I mean, if we're set up above the 50 with the 15 above the 50, we're only going to be able to take long trades. And if we're set up below the 50 with the 15 below the 50, we're only going to be able to take short trades. That's part of our rules. But the indicator is going to behave identical. A skyrocketing volume followed very closely behind, 10 seconds behind, by a skyrocketing delta volume. Delta price. It's going to look exactly the same for an up move and a down move. And somebody actually wrote me and said, well, the indicator doesn't indicate direction. And of course it doesn't indicate direction. It's not supposed to. The Laguerre does, the quants do, but a change in a massive move in volume on this indicator is not meant, we're not looking at negative volume, selling volume versus buying volume. We've already got the delta here. This is going to be an indicator that simply looks at a potential huge move in price, whether it be to the upside or the downside. It's already complex enough. That's all we needed to do. And it'll look identical for a long move or a short move. We don't have it ready yet, John, or we would give it to you now. It'll be ready. It will be ready next week. Well, the analyzer, Gord, already consists partially of the triple alert. Remember, the trade analyzer that the first 5 orders get is not going to give you a signal unless all quants and all the gears are green, all quants and all the gears are red. So essentially, we're just splitting it off from there. That's why it's such an easy indicator for us to make. We're going to pull it out from the trade analyzer, which you can get, and simply project it on our charts. Sure, Mike. Let me drop this. Crude 947. And okay, hang on, Mike. 947. See nothing here, Mike. Look how the chart looks here at 940. Wait, I don't think this is today. Hang on, I'm sorry. Let me look today at 947. Oh, I would take that in a heartbeat. Well, I would wait for the pivot break, Mike, right here at 948. Here's your entry, right here. You want the 2/3 candle close right here. And right here, you've got the Laguerre, you've got the quant, you've got the long-term Laguerre, and look at the trading chart Laguerre. It is heading down. And you've got the break of the pivot. This is where you're going to stop out all those buyers. You've got pink background, dual dots. Here's your stellar entry, night at 948.52. Very, very low risk trade that I would consider taking right out at support. Out. And you've got yourself a really nice move. At 1041 versus 1047. 1041 is a great move. I would take that. I would have taken that trade. And let me look at 1047. I know what you're looking at here. I think you're probably looking at this candle here, this pullback right here. And I'll tell you, Mike, is this 1047? I'll tell you something. This trade is a gimme at 1041. I mean, if you take the pivot breaker here, I mean, it's a perfect trade. I'm assuming you got the Laguerre. My chart is not, is not real time. Unfortunately, if you can assess the direction of the longer terms, but this is a great trade. This pullback and continuation, I think I would have taken. I think they're both really good trades, Mike. I mean, obviously, this is the lower risk because the space between the 50 and the 15 is closer. And if you look at this trade, you've got triple resistance in a sense. You're trading off yesterday's close. You're trading off the 15. And to some extent, you're trading off the 50. But you certainly have real tight dual resistance right above the candle. That's a killer great trade. And if you hung it all the way, you got a huge move. If you needed a re-entry, I would have taken that re-entry right there. It's a great instructive move to point out. In fact, if for some reason you got bopped out here, you get right in there. Either wick, though, is good enough for me. Here or here. So nice. If you took any of these today, you did really great. Now, if you didn't have the long-term Laguerre here and you needed to wait for it here, this would have been the entry right here. That's your entry. And I wouldn't have taken this trade if I didn't have the long-term. I think the trade is too risky. I would have waited for the pullback and waited for that long-term Laguerre to kick in and then taken the trade. So that was the scenario, and that's what you're looking at to compare. This is the only entry you got. If you don't have that long-term, you're really looking at a significantly increased risk. And listen, our goal is to minimize risk and avoid losers. If you take this trade, and remember, it's a retrospective analysis, you got a lot more, but you have no idea that this isn't going to go 2 or 3 ticks and go right back up against you. And crude does that all the time. So if you wanted it, I would want that long term. I would have taken the trade at 1047. Mike. That's your entry. The platform's goal is to define risk. That's all software can do for you. And this gives you a great risk assessment. And that's a really great example, Mike. I really like that. Oh, thank you, Gary. I won't say it out loud, but I really appreciate that. It's very kind, and I really do. Jason, I already went through the whole sim. And like I said, I'm not going to mislead you. I already I think you just typed this before I did. You know why I'm in sim. And the reason I'm in sim is I don't want the CFTC coming to me and telling me that I am, not instructive. This isn't a educational service. We are acting as active brokers and active traders. And I'm telling you, they're looking for people like that. So right now, we'll be on sim. I wish I could trade live. I swear to you. And in the very near future, if things sort of blow down and blow over, we'll be in the live mode. Because like I said, our simulator gives us all the headwind that a live trader has. Tons of slippage, and we don't get automatic fills. So what we get and the amount of money we make is 99.9% the same as you would have made on a live account. And I would love to have taken home $1,500 extra this week. I give it to my son, and he can go out and go to a strip club. I'm just kidding. He's only 18. And I would love to do that. You need to trade it on Ninja 7 or 8. Now, if you have Thinkorswim, it will power 7 and 8. So you don't have to do anything. You just download the platform. We will hook up Thinkorswim for you. And you actually get to take the trades on Thinkorswim, but you get a whole Ninja platform that is powered for free with your Thinkorswim. But you can only project the indicators on 7 or 8. Your other option, if you want to trade a different platform, and there's others too that do that. Awanda does it. Interactive Brokers allows us to do that. But if you don't have any of those, you can always just trade a demo. You can get a free demo data feed and take the signals off Ninja and trade it on your live account. That's always an option too. Hey Dale, how you doing? It's a separate purchase, Dale. That one's separate because we've just, this has a patent pending on it. And we make it so cheap. I didn't even want to get into it, but it certainly makes trading an enormous amount easier. If you come aboard and speak to Rory, maybe he'll work with you on giving you a discount on it, but this is a really, really fabulous tool. It's got us kicked off the NinjaTrader ecosystem because if you have the static dome or the dynamic dome, the one you pay more for, you dump the subscription. And they were upset with us. And I'll tell you, if you go back to the old webinars, we used to have a complete volume ladder here, just like the dome, just like NinjaTrader did. But they told us, when we didn't take it off, they would consider it a patent infringement. So we had to chop the dome off of it. But you could have actually placed your trade, buy stop, sell stop, right off the NDT too. But we were being talked to by a very big company in very serious ways about chopping it off. So unfortunately, we had to take it off. But if you want it and you talk to Rory, I'm sure he'll work with you on it, Dale. It's a great tool. And back in 2014 and 15, it even had the lower ladder on it, but we had to discontinue it. Jason, in order to avoid scrutiny and in order to be able to represent beyond any shadow of a doubt to any regulatory agency that you're an educational service and not inducing people to trade a live account as you trade live, you have to do this. And believe me, I kid you not, and it's probably something I shouldn't even put in here because it's going to go on YouTube. We're just taking the safe route, and it's not to try to sell software, because if we wanted to do it to sell software, A, we wouldn't even have a room, and B, we would set the simulator to fill on touch and never give slippage. But I show these entries and I didn't look for, so we deal with such incredible slippage. That's why we had to dump the DAX. The DAX was giving us slippage and killing our trades. So all that really matters is if I take a trade and I get a certain amount of profit to within 99% certainty, you're going to get the same. That's really all that matters. And I get to, stay out of trouble and get to be here, and and Rory and Sergio still get paychecks. That's all. I trade this room just like I'm trading my own money. And hopefully in the very near future, I will be, because I want to make money. And that's really the story. Can you do it with additional risk? Yes, but I don't want the scrutiny, and I don't want anyone looking at me. That's all. I hate the U.S. government, and I don't want them nosing around. Thank you, Eddie. What I like about Mark is that he has a heart of a teacher, and he has his crew are constantly upgrading the software to navigate the ever-changing currents of the market. And that's our goal, Eddie. As the markets change in nature, as institutional volume begins to pick up, we have modified our software. We've gone from range. Way back in 2014, I traded tick. Then I went to range. Now we're to Unirenko. We have our software is always in an evolutionary phase because the markets are always changing. And I just think back to still these huge companies that are just marketing to you Japanese candlestick patterns. They don't trade live. They don't have a room. They don't do anything. They just tell you you're going to make a bundle. Oh, they found a Japanese candlestick wobble. They found a Japanese candlestick twitch. And they'll sell you all this stuff, and you're not going to make any money off of it. So, just beware. And the thing about our evolutionary process is in the process, we do not charge you. And I'll tell you, since 2013, I have people who've been on this system and haven't paid me a dime, and I've been upgraded about 7,000 times. Though in the future, Tim, it's 149 bucks, but you get a lot for that. Not only are you going to get I was almost going to say a shitload of winners, but I'll censor that. After the trading session is over, I spend at least an hour with everybody going over our trading methodology, going over my entries, going over not only just the NASDAQ and crude that we trade. I go over the 6E, I go over the YM, I go over the Dow. If you want other markets, I'll go over those. It's a really in-depth, hardcore educational session. So we may trade for 45 minutes and then spend another 90 minutes learning. And I'm telling you, that's why your learning curve goes up so fast. If I simply took the trades, pushed my dome over, showed you the entries, and closed up the room, which is something I could do, you would not get the in-depth education that you do. And that's why 99% of the people in the room have been there forever, because I teach. And you know something, every time I teach, I learn something myself. And what's really great about it is people ask me really great questions and they make me think. And when I think, and we all think out loud, it's a really nice academic environment. I mean, it's like a classroom. And that's what you want when you day trade or swing trade. Kind of an academic environment where everyone exchanges ideas. I can't remember the name. I think it was Dale asked me to look at these, the risk associated with two entries. I get those types of questions all the time. And it's really, really instructive. And you really do get an enormous amount of time. I mean, if I just did the trading and closed up quick, I charge 99 bucks. But I do so much work afterwards. And it's really good for you. And let me tell you, we're going to close. We're only because I missed a few days, we won't make $5,000 this month. But if you make $5,000 on 2 contracts in a month, what's $149? It's like nothing. It's the cost of doing business. You know what it is? It's how much money your kid costs you when he doesn't turn the light out in his room. I mean, my son is 18 and he can't find the light switch. So trust me, it's not a lot. Contracts for different instruments on underlying stocks. Oh, I see what you're saying. Listen, if we don't get volume like that, we can't use it. Pizzazz. We've got to be able to assess, like in the lower right-hand corner here, crude is pretty much dead. So you can see it's still moving. We've got to be able to do a second-by-second analysis of volume. If we can't do it, that one indicator will not work. It'll work on any tick volume. Absolutely. Remember, we're looking at contracts per minute. We're going to be reprogramming it. So you can look at contracts, lots, or shares per 10 seconds, all the way up to units of 10 minutes, 20 minutes. So it'll work on any financial tool, no matter what the volume is. It's up to you to determine, it's right here, how often you want the counter to go to 0. Right now, it's looking at the period is equal to 1 minute. If I put this to 2, it'll be 2 minutes. You can find the 2 button. Now, there's no seconds here yet, but Sergio's going to give us, oh, there is seconds. I don't think it works yet, though. Or maybe that's part of his programming. We're going to be able to do 30 seconds, 10 seconds, 5 seconds. So yes, it'll work on any volume, Pizzazz, any volume. Do not have, okay, at 10:37, if you don't have the long-term Laguerre, then I would hold off on the trade. Mike. I mean, that, I think it's too risky. I would wait until that long-term kicked in, and I would take the trade at 10:46. So, that really answers definitively your question. I know, I knew that was why you asked, Mike. Okay. Thinkorswim, Jason, is great because Thinkorswim will power this for nothing. And the API is awesome. It stores tick data. It does everything. Thinkorswim is like having the strongest live data feed. And we do all the configuring for you. We will set everything up for you. We'll set it up for you on stocks, Forex, and futures. So Sergio will do all the heavy lifting. If you have any problems or glitches, people call us all the time. But Thinkorswim is a great platform because we can drag that data feed right over. They created an API we use that really powers Ninja really nicely. It's very seamless and very good. Yes, Stephen, we have what we call these hybrid candles. The reason they're hollow is because remember that Unorenco candles and all Unorenco are really illusions. They don't really tell you what's going on with price. But I don't like to trade illusions. So we created, and as far as I know, it's unique, although some people in the room have told me it's not unique. We want you to see a wick pullback inside the candle body. Now, the candle body is defined by the Unorenco setting. Like I said, on crude, it's going to be a 12-tick candle going down. But if you want to get a pullback and then a continuation, you don't necessarily need the wick to pop out the top of the candle. You can see it inside. So everything is transparent. We get the symmetry of Unorenco, and we've unmasked the fact that the Unorenco symmetry we see is an illusion. And we know exactly what's really going on inside each Unorenco candle because we've created the wicks inside these candles. So we make them transparent, and Sergio programmed the wicks. It gives us much more power to trade. If you've got this, Stephen, you should have it automatically. If you have this indicator that says hybrid candles, all you've got to do is go up to here and make your color transparent and transparent. And the wicks will appear. That's all. And this is your data series. Just open up your data series and go and hit transparent, transparent. I have my outline of 3 and my wick is 3. So a nice thick wick inside, and you'll get them. Okay? I'm going to try to finish up because I'm going on 2 hours. Thank you, Dale. My pleasure. No, what I'm saying, Jason, is you can download a demo of Ninja, take your Thinkorswim data feed, and power NinjaTrader. It's very easy. Like what you see I'm getting here, I'm getting because I have 2 data feeds. I have Continuum and I have Kinetic. But I'll show you one of my connections. I think it's still here. Account connections. See, I have TD Ameritrade. I have Thinkorswim. If I use this data feed, which you have, I can power this entire platform off my TD Ameritrade data feed, and we're going to program that for you. So you can run this whole thing at no cost to you. You don't have to pay for another data feed. You don't have to open up another brokerage account. You're just going to have to take the entries on your Thinkorswim platform. Okay, Jason, so I want you to be clear about it. If I wanted to, I could power this whole thing on my TD Ameritrade. I call it TD Ameritrade. You could call it TOS if you want. I've had an account with them for 25 years. Sure, Sean. Just give us, just put your phone number in the room. I won't give it out, or put your Skype in the room, and we will do it with you. I'll Rory call you or Skype you, or we have your email. We can use that. Dale, thank you. Dale says he loves the system. You see that, Mike? When Michael says, I used to run a live trading room for one of your competitors, and we went through the same thing with the CFTC NFA. I had to get my Series 3 license to proceed. See, Michael, I mean, I have a really smart attorney. I'm telling you. I just don't want that hassle. It's not like we're going to go to jail or, we're, going to be carted off and, put into Guantanamo Bay. But I just don't want any issues. That's all. And I mean, at my age, I don't need to go out and get a CFTC license. It's great that you have the ability to do it. I mean, that's really commendable. That's great. That's great, Jason. Thank you so much, Phil. Great session, Mark, especially the new indicators and audio alert in the works. God bless you and your team. Thank you so much. I really appreciate it. Okay, Jason, well, I'm glad it was. All I did was tell you, I just told you the truth. Okay, no, I'm glad it was a fair answer. Okay, I mean, listen, I don't want you to come aboard and have unreasonable expectations. I want you to know exactly what's going to happen so that you're going to be happy. Because if you come aboard and I tell you something that's not true, you're going to ask me for a refund and we're going to give it to you. So I don't want that to be an issue. I want you to know that you can have the platform with a TOS data feed, but you can't trade off a Ninja. You're going to have to trade off a Thinkorswim. Kevin writes, their trading is as much training as it is trading, the best of both worlds. Thank you so much. I use TOS for charts, but not to actually trade. My data feed is from Gain. Then you know what? You'd have to speak to Sergio, Jason, because now you're just above my pay grade on the tech side of it, and maybe that's okay. I don't know. So make sure you do a little more due diligence with us before you do anything. Okay? I don't know. I just don't know. See, if it powers Thinkorswim, we're going to pull it out of your Thinkorswim with an API, and it still may be fine because this API doesn't care how your Thinkorswim is powered. It creates the data feed out of TD Ameritrade. It may be fine. And what I'll do is I can have Sergio look at this and get back to you to let you know definitively. The automated trading, George, is about a week and a half away. Remember, Stephen, they're only going to come back this far, then they go outside the candle. That's just the way the programming limitations are. We just want to see these little wicks inside. It's always going to be one tick off the base. But when it gets down that far, then the wick oozes out the bottom of the candle. So you don't lose any data at all. See right here, it comes down to one tick off the base of the candle, and then you get a tick, and then you get that right here. So, I mean, there are coding limitations on NinjaTrader, and that's just the best we can do. It won't let us bring the candle, the inner tick, right to the base of the candle body. It'll push it outside the candle body first. Well, I know, I understand, Jason, but it's piloting your Thinkorswim, and we pull it out of your Thinkorswim. So let me get back to you on it, okay? I'm not giving you the okay. I'm not saying it works, and I'm not saying it doesn't work. What I'm telling you is I don't know. And what I need to do is to get with Sergio. So he's here, and I can get with him, and then we can, we'll send you an email and let you know definitively whether or not your data feed, which is from Gain, will still work, and we'll let you know. Okay? I gotcha. I really do. Interactive Brokers, Sean, is really good. And we got your phone number. Rory, IB will work, Sean. We have a lot of traders in Canada are Interactive Brokers. Their API will run NinjaTrader. I know that for sure because we had a lot of IB people. Okay, well, we're going to figure that out, Gary. Yeah, well, we get a lot of slippage on the DAX, and that's a big problem. No, I don't think that at all, Jason. Really, I just think you're trying to get a clear answer, and really the way it shakes out is I just don't know. So I've given you a nebulous answer purposely because I don't want to mislead you. Okay? Yes, Sean. Simply because you asked, it's okay. I got you. I totally got you, Jason. And what we'll do is we'll take this I'll take this transcript, show it to Sergio. The guy's got a master's degree in computer programming. He will know for sure whether you're okay or not. And if he tells you you're okay and you're not okay, we'll fix it for you. Don't worry about it. Thank you, Sean. I mean, I'm looking forward to trading. Remember, there's no trading on Monday. We got 3 days off. Monday, I get to watch Netflix. Jason, Sergio's email is sergio@rightlinetrading.com. You can email him directly. And he opens up all his mail every day. Just Sergio, SERGIO, @rightlinetrading.com. Okay. All right, listen, I'm going to have to go because I actually have a phone call. Okay, great, Jason, great. I just got to run. I'm sorry. I mean, we were supposed to go an hour, and we're now on 2 hours and 4 minutes. Listen, I appreciate everyone's interest. You know what my goal is. And listen, the goal of an educator is to have you make money. That's what I'm educating to do. Educating you to do. Educating you to trade profitably. I mean, I was educating you to speak French. I would expect you to speak great French. I'm educating you to become terrific day traders and swing traders. And so I want you to make great money. That's my goal. And I really get a rush when I see traders put these nice numbers in their room, in their slots in the morning. I really do. And if I don't make good money every morning, I feel crappy all day. It really affects me. So listen, have a great, great weekend. And you too, Eddie, great weekend. Thank you. You and your family too, Eddie. You're my pal. You call me anytime. And I always love having you aboard. Very supportive and very good guy. And Eddie's been around forever. And he's just a great guy. And have a wonderful, wonderful Memorial Day with your family. I just wish you all the best of luck and happiness. And let's get to it on Tuesday and beat the living daylights out of all those counter trend traders. Run them over when all our signals tell us we've got a definitive continuation trade and beat them up. You too, Kevin. Take care, everyone. Bye-bye.